A very warm good morning to one and all. Today, I, Anushka Gupta from Scholars Pride School, got the golden opportunity to learn about equity cult and concepts of stock market under the leadership of Dr. Sunil Tripathi at a very young age. I am currently studying in 11th grade. I would like to present my hearty thanks to him as he helps us to learn the concept in the very simple manner. I am attending his classes from the very beginning, that is 22nd December 2023. I would also like to learn more about equity cult and concepts of share market. First of all, if you want to buy the share of any company, you should know the type of the business the company is following. ROCE, return on capital employed, and capital employed refers to the sum total of debt and equity. Market cap refers to the product of total number of shares and price per share. Moving ahead, price of a share is directly proportional to the demand of the share. ROE refers to the return on equity that measures the company's profitability on the shareholders' equity. It's not the price of the share that tells us whether it is cheap or expensive. It is the worth of the share that let us know that the share we are buying is cheap or expensive. Price is something that is known to everyone, but value is something that we need to calculate. To value something, we should know what we are getting today and what we are getting in the coming future, that is 4 to 5 years or more. Buying a share at a price lower than the value is a very good deal. Moving ahead, book value. Book value refers to what we are getting today. That is, if we sell a company, then when we subtract liabilities from the assets and divide it by the total number of shares, the amount received it is the book value. We also learned about cash flow. There are three types of cash flow: operating cash flow, investing cash flow, and financing cash flow. If you need to invest in the shares of a company, then the three conditions should be satisfied. First, the sales of the company should be increasing, the EPS of the company should be increasing, and the operating cash flow of the company should also be increasing. EPS refers to the earning per share. Now, moving ahead, we further learnt about NSE, BSE. NSE refers to National Stock Exchange, and the companies registered under this maintains their own index referred to as Nifty. Bombay Stock Exchange maintains their own index referred to as Sensex. Top 30 countries listed in BSE are mandatory to maintain the index called Sensex, and top 50 countries in NSE are necessary to maintain the index called Nifty. Of the companies that are the part of BSE, that is top 30 countries, are also the part of Nifty, that is the part of top 50 countries. The difference between the selling price and buying price of a share is referred to as capital gain. There are three types of capital gain. When we buy a share and sell it within the day or within an hour, it refers to intraday trading. The tax on intraday trading is 10%. Short-term capital gain. When we sell the share within 1 year, that is before completion of 1 year, the tax on short-term capital gain is 15%. The last type is long-term capital gain, that is when we sell the share after completion of 1 year or more than 1 year. The tax on long-term capital gain is 10%. When we take loan from the broker to buy the shares, it refers to as margin. Bull market, bear market refers to the market when the prices of the shares goes up and goes down respectively. Bonus and split. After bonus and split, the total number of shares changes, but the total wealth of the shares remains same. For example, if you have 10 shares of 10 rupees each, but the shares are split into two parts, that is, it becomes 20, then the money also split in 5 rupees each, but the number of shares increases from 10 to 20, but the wealth of the total shares remains same as the cost decreases. Candles. There are two types of candles, green candles and red candles. When the closing price is higher than the opening price, then it refers to as the green candle, and green candle is also called as the white candle by the inventors. Red candle. When the closing price is below than the opening price, then it is called as red candle, and it is also called as black candles by the inventors. Doji candles. Doji candles are the types of the candles when the opening price and closing price are almost the same for the day. That is, the shop opens with the price of a particular commodity as 2500 but closes as 2499. That is, it is a very close price. So it is refers to as dodgy candle. There are two types of wigs in the candle, upper wig and lower wig. When the lower wig is very long and the upper wig is missing, then the lowest point of the lower wig is the best price to buy the share. When the candle of the previous day is fully covered by the candle of current day, then it is referred to as engulfing. Moving ahead, we also learnt about many other terms like hammer, inverted hammer, shooting star, etc. Moving on the next topic, that is DMA. DMA refers to daily moving average and EMA refers to exponential moving average. There are different types of DMAs depending upon the type the trader you are. If you are a weekly trader, then you should see 5 DMA. If you are a monthly trader, then you should see 20 DMA. And if you are a quarterly trader, you should see 50 DMA. Moreover, if you are a long-term trader, that is dealing after years, then you should see 200 DMA. Last but not the least, there are three types of traders: value traders, growth traders, and crossword traders. If you are a crossword trader and taking 2 DMA at a time, then we have to see the small DMA crossing the other DMA. For example, if we take 50 DMA and 200 DMA, then the 200 DMA will be fixed and we have to see where the 50 DMA is crossing 200 DMA. Thank you and have a nice day. I would like to present my hearty thanks to Dr. Shunil Tripathi, as I have learned many things about the stock market, and I would also like to learn many new things ahead.